Welcome to our midweek Forex and futures forecast. First market we're looking at is the Australian dollar. You had a bit of a dead cat bounce yesterday off that 50% level. Let me pan out to a weekly chart. No doubt about it, secondary down, day-to-day down. That long-term primary pattern's still up though. You take the 2010 low to the 2011 high, you come down and you have a 50% retracement right there. So, it's hard to get too bearish on this market with that 50% holding. On the other hand, let's drop back down to the daily chart, and today was not a good day for the Aussie. I would expect it to some potentially follow through from that. That wasn't the case. So pretty weak market overall. So I would expect another test of that 50% right there. To me, Aussie weakness is telling us two things. Commodity weakness overall, and also China is probably not going to be able to speed up the way they have in the past. And I'm not saying that you're going to see a catastrophic slowdown in the Far East either, but they're not going to pick up like they were. Next market will be the Euro US dollar. This is a great chart. A lot of definition on here for us, and it really points out the balanced state you're in the euro, where the primary down but the secondary is up, the day-to-day's down but the 10 days up and the 20 days down. So the majority of patterns still down, so that's why we're still selling rallies even on an intraday basis. Short-term basis, we're still bearish. However, you see that balance point right there? That's what we call a risk tolerance threshold level. So our RTT level holding tough there, but guess what? You close above it, that's going to shift things. So that as long as that balance line is still in place, this pattern is bearish. On the other hand, if you're able to close above it, you have a new bullish pattern in place. As a matter of fact, the 20-day pattern, which is down, will shift up. Then you'll have the majority of patterns up. We think potentially that opens up the door to further short covering all the way up towards the April highs there. Now, we'll have to see if that line holds, which it is so far. That pattern's still bearish. So we're pretty much in the bear camp in the euro, but we can't rule out a rebalance there, a shift as far as a short squeeze, for lack of a better term, back up toward the April high. So we'll have to keep an eye on that. Next market, dollar yen. Dollar yen has just been a great trading vehicle, particularly the short term also, and it's not giving up the bull easily here. Here's another one where we would describe that as counter trend movement so far, just as we would describe that rally in the euro that we just saw in the past couple of weeks, a counter trend move higher. This definitely a counter trend move lower. We're not going to write off the dollar yen so quickly. We think probably have a little bit more room on the upside here. On the other hand, hey, we are in a counter trending environment, and you had a decent day today, but it couldn't close on the highs. So we think you'll probably see a little bit more downside. We actually kind of like this guy all the way down to just above 98 even. There's a zone there. We call that a risk tolerance threshold zone there, and that'll probably act as a balance line also down there. So, the chart looks kind of ominous, pretty good momentum on the downside, but just yet we're not, that doesn't necessarily mean we're all that bearish on it yet. As I said, definitely have to keep an open mind, and we're going to continue to look for buy signals here in this bull market. Next market, the S&P 500. Here's another one where, again, you see your counter trend, a little over the last week, like we're seeing across the board. We look at the stock market a little bit different. Yeah, I understand you've had a big rally this year, really the past couple of years, but I think for scale you have to go all the way out to the monthly on this guy. And when you look at the monthly, here's what we see. Yeah, you see those long-term patterns are up. We see a market that's essentially been sideways for 13 years or so, and we see this market finally breaking out of a sideways trading range. So no doubt about it, there's some downside here, some room on the downside if you had a correction. But longer term, we really view this guy as breaking out of a long-term sideways pattern. Next market, let's take a look at the gold. Here's gold. I think there's some more room on the downside, secondary down, day-to-day down. Actually, your short-term primary pattern's also down. We think there's some more room here on the downside. Let's get scale on it, jump out to a weekly. I'd feel more comfortable with gold, somewhere in the zone between 1,300 and 1,100. 1,100 is a nice level. You have a nice balance line down there. That's our RTT level, risk tolerance threshold level, too. So I'd like to see that level. I think it's a little bit premature to be going long gold just yet, although you can see you're on our balance line for sure. So no doubt about it, you have support there. It's caught it twice now, but you're really not getting a bounce out of there. You know, the big test for gold is going to be if you have a stock market correction, what does gold do? If you have a stock market correction lower and gold starts to recover, then I think there's perhaps some hope for the upside. Right now, you know, I don't see it yet, though. I'm not seeing any bounces there. I like 1100. I'd like to see 1100 in the gold market. Last market we're going to cover would be the dollar index. I'm a dollar bull. However, you know, you can see the way we're situated, the secondary is up, the day-to-day is up. However, here's another one where if you rebalance this market, you could see a sell-off down towards that 81 handle. And from my perspective, as a bull, I'm a bull, and I'm going to steel myself for a possible correction down to that 81 level. Doesn't mean it has to happen. Technically, you're on an RTT level right there. Here, let me go to the daily, and you can see that. So you're balancing up on that 82.5 level. That could be a big level. Didn't get much of a bounce off it yet, but as a dollar bull, my day-to-day is up still. Basically, as long as it holds that green line, that RTT level there, the day-to-day pattern's up. I'm steeling myself for a potential test of that secondary zone right there. So we'll have to see. I'm still a bull. Hey, wouldn't mind seeing it find support. If it finds support here and gives us a buy signal and can shift momentum back higher, I'm all for that. I'm a little bit cautious, though. I think you have to expect corrections in the dollar index. I'm no less bullish on this market long term. I think you do have a legitimate breakout here on the long-term chart. You can see it on the monthly chart. And, I think there's plenty of room up above. Thank you so much, and we'll see you next time.